Good morning. You listen to FloorDaily.net, and I'm Kemp Harr. This morning, my guest is Kermit Baker, a Harvard economist that follows the construction market. Kermit, how you doing?
I'm doing well, Kemp. Thank you.
Yeah, it's good to talk to you. It's been 6 months or so since we've talked. Tell us what your outlook is for the economy right now.
Yeah, we're halfway through the year, Kemp, and I think that the economy continues to be very healthy. We're likely to see GDP growth, approaching 3% for the year. A little bit weaker in the first quarter, but I think the second quarter number, when we get that later this month, is going to be a good solid number, and I think we're going to have a good second half of the year. So I think we're in a good place right now.
Some people are coining this a Goldilocks economy. It's a prediction of a 2.8% GDP, 2% inflation, unemployment under 4%, consumer sentiment's high, saving numbers are good. I guess the only two things to watch are the oil prices are going up, and then there's the interest rate rise, right?
Yeah, and I think both of those are sort of reflective of a healthy economy. More demand for financing, for capital, is pushing up interest rate. I think the Fed is just trying to keep inflation under control, and oil kind of going up a little bit, but still below what we've seen as a trend for the last 5-10 years. So I don't think either of those are all that troublesome.
Yeah, let me tell you something that's kind of ringing in my head. I went to the Neocon show in Chicago last month and met with a friend of mine who is the CEO of a company, and we were commenting about the exuberance. Everybody was feeling good. The architects are saying they've never seen this pace of work. And then he said, Kemp, he says, I just don't see the orders. How do you explain that?
My sense of reading the sentiment, Kemp, is that people are feeling very good about things, but kind of waiting for something bad to happen, if you will. And I think that's partly we're now into the 10th year of this economic recovery and expansion. This is the second longest in the post-World War II era, and within a year we're going to be in the longest post-World War II recovery. And there's just a lot of uncertainty out there, and what can go wrong. And I think at this point in the cycle, you said a Goldilocks economy, and I think that's right. But I think at this point in the cycle, the list of things that could go wrong is probably longer than the list of things that could get better, if you will. That there's more likelihood of some negative effect on the economy than there is some positive effect. I think folks are just kind of looking over their shoulder and saying, when are the good times going to end? What signals should I be watching for to see when the economy is beginning to slow down a little bit?
Well, as a Harvard economist, let's talk about those signals. But one of the little caveat to that is that we just turn the news off. I mean, that's I think that's a problem. But anyway, let's talk about some of these indicators that you follow. I mean, one of them is the Architectural Billing Index. It took a little dip in September of 2017, but it's been above 50 now for an extended period of time, which means that there's a lot of people doing some planning to build some things, right?
Absolutely. No, the Architecture Billings Index has been kind of turned the corner at the end of 16, and 2017 began to accelerate, and we had a good solid year last year, and we're almost halfway through this year in terms of numbers. That we've got numbers through May, and they continue to be very healthy, and that's encouraging. And I think even more so, we also track new work coming into architecture firms. So the Billings Index is kind of projects they're finishing up, they're billing out, but we also track new work coming in, and that's been every bit as strong as the work they're finishing. So much so that we're seeing backlogs begin to increase, and we're now seeing the highest level of backlogs at architecture firms since this expansion began. So certainly the construction industry is basically one of the pluses in terms of stronger economic growth.
Now, you like to remind me that this ABI is a leading indicator, and if you're in the flooring business, I mean, it's 12 months out probably. So,
well, probably more than that.
Yeah.
I mean, we say it's a 9 to 12 month over general construction, and obviously some of that is front end stuff, and then flooring would be the tail end. So I'm guessing you're 12 to 18 months out on that.
All right. So that's
assuming these projects don't get canceled, assuming work continues on them, I think you're exactly right. That means another year and a half of solid growth in flooring.
Yeah, and let's look at LIRA, and that's the leading indicator of remodel activity. That's a Harvard study that I guess you've got you're probably working on it and know what it's going to say, but you're releasing one on July the 19th, another update to that report.
Exactly. We've got one coming out next week and just working at it now, but the numbers that we saw through the first quarter were very solid. We're seeing high single-digit growth in terms of spending on home improvement activities, so that's a positive sign too.
So that's going to take us into, your last report, which is in the first quarter, I think it was April or so, said that things look good into the middle of 19. So that's another positive read.
Yeah, absolutely. We project that out 3 to 4 quarters, so that does certainly point to continued growth. I mean, 18 doesn't look to pose any problems, and I think increasingly as we see indicators come in, our Architecture Billings Index, our LIRA, and things like that, it's pointing to 19 being a good solid year also.
All right, let's cut into some of these sectors real quick. Go back to commercial for a second. I guess the 3 biggest sectors are obviously hospitality strong, office is looking pretty good, and retail's looking pretty good, right? Is that the other?
Yeah, all 3 of those are seeing good solid numbers, in spite of the doomsayers saying that market's about ready to dry up on us. It continues to show good solid numbers so far.
And you're talking about the Amazon factor, right, with retail?
Yeah, exactly. I think it's online for retail. It's smaller office space for offices. It's Airbnb and other sorts of things for hotel. I mean, I think we can come up with the concerns, but so far it really hasn't slowed it down.
Yeah, all of these are thanks to Steve Jobs, right?
Yeah, there you go.
All right. So, and institutional's actually looking pretty good, right?
Yeah, I do think that the commercial side is beginning to be maxed out. I don't think there's any much of a fear of a downturn there, but I just think if we're going to see growth in non-residential building activity through 19 and into 20, majority of that's got to come from the institutional side, healthcare, education, government, things like that. That's just got more room to run than the commercial side.
All right, let's cut over to residential for a minute. You've said before that for single family, if you just look at that for a minute, much of what's done there is in the area of kitchen, baths, and outdoor. But you've also mentioned that you've got these retrofits for the aging that want to stay in their home. So that's continuing to be robust, right?
Yeah, that's a huge market that we haven't really figured out a way to tap into it too very well. You and I and others, Kemp, are getting older, and we're looking for ways to stay in our homes as long as we can, and that means making some fundamental changes to it. So that looks to be a really one of the stronger growth markets over the coming decade.
Are there any other trends out there that are something to keep an eye on?
I think at this stage in the cycle, we've got to start looking at the supply side of the market, Kemp, and I think that's where there's some concern. I think demand is strong. We talked about that. Mm-hmm. But the labor problem in construction continues to be a huge issue, and we're starting to see more of it now on the materials side. I mean, non-residential construction materials are up close to 10% over the past year. A little bit of the speculative concern over steel and aluminum and things like that, but we're seeing it in lumber and other areas too. And I think it's just reflective of a strong market. When the market's strong, you start looking at the supply issues. You start looking at labor, materials, land, and land costs have gone up. You start looking at financing costs. You talked about short-term interest rates heading up. So I think those are probably the things that we need to keep our eyes on moving forward.
Okay. All right. So but you're thinking at least 18 is good and maybe to the middle of 19.
Yeah, certainly what we're seeing now would suggest that we're seeing solid numbers that are going to run all the way through the first half of 19. So I think it's probably realistically 2020 when we need to start focusing a little bit more in terms of how that's going to shape up.
All right, Kermit, thanks for the read on this. Again, been talking to Kermit Baker, an economist with Harvard who tracks the construction market, and you've been listening to Kemp Harr and FloorDaily.net.